Hi there, welcome to Kneppy Invest. We're already halfway through one of my favorite months of the year, July. And the reason July is one of my favorite months of the year is because it is quarterly reporting season. So a select few companies on the ASX have to release either Appendix 4Cs for non-mining companies or Appendix 5Bs for mining companies. And these are simply just cash flow reports. Now, a lot of these companies, in fact, the majority of these companies will also release an activities report alongside the cash flow report. So I love going through these cash flow reports to gain an understanding on how these companies are performing. And in particular, I pay attention to cash receipts because over time, I want to see cash receipts increasing. And one of the first things I look at when I start researching a company is whether that company has any growth in revenue. And that's why I love Appendix 4Cs and 5Bs. Now, the majority of companies that do release Appendix 4Cs or 5Bs are not companies that have any receipts because the majority of those companies are mining, exploring companies. And in the past, I completely ignored Appendix 5Bs. But over the past 2 or 3 years, I've started to look at those quarterly reports as well. So I have been collating Appendix 4Cs, cash receipts for numerous companies for over 10 years. And to be honest with you, if a company has been releasing Appendix 4Cs for over 10 years, that means the company has not made it because eventually, and the hope for all these companies is they can become operating cash flow and free cash flow positive. And at some point, when they do hit that inflection point, the ASX will tell them you don't have to issue these quarterly reports anymore. And that is a fantastic feeling when you're a shareholder and one of the companies in your portfolio reaches that point. Now, last week, I did a video on the first three companies that released an Appendix 4C. And those were ECS Botanics, Alexium, and Althea Group. In today's video, I'm going to look at the companies that have released an Appendix 4C or 5B over the past 7 days. And I am going to really focus on 9 to 10 particular companies, starting with a company called 8 Common, which released their Appendix 4C at 9:35 a.m. on the 11th of July. Now, I don't know a lot about this company. And one of the main reasons I don't know a lot about this company is because the cash receipts for 8 Common have been quite disappointing since I started following. However, this was a good quarter for 8 Common. Now, I'll talk about that and actually look at the cash receipts history in a second. So if you don't know what a company does, all you have to do is go to the About section at the end of their activities report, because if you never have seen an Appendix 4C, typically they start off with an activities report and they go to straight to the cash flow report. But that doesn't always happen. So as you can see, there's another company called 333D released 2 reports, an activity report plus an Appendix 4C. So that company actually separated the activities report and the cash flow report into 2 separate documents. 8 Common didn't do that. They just combined those 2 things into the one document. Now, I'm not interested in the activity report unless I'm interested in the company. And 8 Common is perking up on my radar list simply because of this quarter. Now, 8 Common Solutions deliver enterprise-grade financial transaction processing for government entities and large enterprises businesses. So it seems like it is a software company. Its flagship Expense 8 platform is a leading pure-play provider of end-to-end travel expense management software, card application, and management. Do they have anything else here? It looks like, it's mostly Expense 8. Its new product, Card Hero, prepaid card fund distribution, delivers a closed-loop solution to support regulated, large network, and high-volume requirements. 8 Common specializes in large enterprise and government segments, which is fairly, I actually do like that, because those sort of institutions or government bodies can be quite solid and stable. And more than likely, if you do gain a foothold in those areas, you're able to maintain receipts growth and revenue growth if you're able to expand. So they also include, some of their customers include Woolworths, Broadcast Australia, Amcor, and over 162 state and federal government entities. So even though they have a lot of clients, the cash receipt's not that large. So in this particular quarter, 8Common received $3 million of cash receipts for the year to date. And this is really relevant for the June quarter and for those companies that have a normal Australian financial year. We can see how they've performed over the last year just by looking at the quarterly cash flow report. So 8Common received $7.7 million of cash receipts in the year to date. So just comparing the quarter to the year to date, this was a really good quarter. Not only that, and this is the most important thing in my opinion, they were operating cash flow positive for $167,000. And even more important, they don't spend any money on capital expenditure, $4,000 on that, which means they were free cash flow positive in this particular quarter. Not much spending in investing or financing activities, in fact, zero in financing activities. That means the cash on hand for this company actually went up, but from 1.6 million to 1.8 million. Another thing I want to look at is, does the company have any debt? So we can see that, actually we've gone past it, in section 7, no debt. So this company has no debt. Growing receipts, it seems like, based off comparing the current quarter to the year to date. So let's have a look at the company's cash receipts history. 8C0, here we go. So this is 8Common cash receipts history going all the way back to the December quarter 2017. And to be honest with you, not much growth in receipts from there all the way through to a few quarters ago. And all of a sudden, receipts have exploded in this quarter. In fact, their receipts went from $2 million record back in the June quarter 1 year ago to $3 million. Now, it seems like these two quarters, there could be some seasonality to 8Common's receipts because those are the two record quarters for this company. And then you can see in the September quarter last year, receipts went from $2 million to 1.2. So there is a possibility that 8Common might see the receipts drop off significantly in the current quarter, the September quarter, the first quarter for financial year 24. So even though we have had, or 8Common did have a really good quarter, it does not mean that this company's growth in receipts is going to continue on this one quarter trend. I'd like to see a trend continue for a few more quarters, but things are moving in the right direction for 8Common. The other thing I like to see is the market cap of the company. So sometimes I just like to go to market index because this is usually up to date. And when I say up to date, a lot of these other websites or platforms will give you the market cap of company at the end of closing from the previous trading day. But I'm pretty sure market index is updated to the minute or something like that. So the market cap of 8Common is 21.3 million. Ordinary shares, 224 million. And then the next thing I like to look at is just the chart. Now, I'm going to look at the daily chart for these companies, not the hourly chart. And the main thing to notice here, the share price was in a downtrend. In fact, the share price had been in, or started in a downtrend towards the end of 2021. And then possibly, just possibly, the share price of this company is moving out of the downtrend because of this quarter report. Nice jump in share price. Share price increased 26.7%. And the main reason the market got excited about this particular quarter report is because they were operating cash flow positive. Now, do they have anything else? So next thing I like to do after the, the cash flow report, I like just to see what they're talking about in the activities report. So key financial highlights, talking about analyzed recurring transaction and SaaS revenue or ARR of 3.9 million. Talking about how a lot of this stuff is increasing, including ARPU up 21%. Compared to the previous corresponding period. Federal government ARPU of $56.41. And just want to see if there's anything else interesting. Total revenue starting to climb. So there's a slight subtle difference between revenue and cash receipts, but receipts is a good proxy for revenue in my opinion, but not always, but usually it is. Recurring SaaS and transaction revenue nicely increasing. So everything is on the up for 8Common. The question is whether they can continue this into the next few quarters in the next year. But I do like the very fact that they do have a lot of government customers and clients. So that's 8Common. I've never had a real close look at that company. So the next company I want to look at is 333D. So I've already mentioned they separated their report into two sections, the activities report and Appendix 4C. So let's have a look at, so usually I have a look at the Appendix 4C first. So this is 333D, just zoom in there. Now, most companies put their numbers, their cash receipts into millions. This company didn't. This is actually the amount of money or cash receipts this company received. So it's not 4.225 million, it's $4,225. You just see the difference, and this doesn't happen a lot. I haven't seen this often. And you see a common, if you remember that, had their receipts in, well, thousands. It's not millions, thousands. So 3,019, which is 3.02 million. And 333D is not in millions. This is actual dollars. So not in thousands of dollars. This is actual dollars. So instead of $4.2 million of receipts, it's only $4,225 of receipts. So keep that in the back of mind when you do look at some of these Appendix 4Cs. So they burned through $51,000 of cash for the whole year, burned through $346,000, only received $25,000 in receipts. Now, I do think, I know this company not a lot, but I have a feeling this company has something to do with 3D printing. Let's have a look at their activities report. Principal activities: using 3D printing technology and growing library of digital assets, the company provides licensed merchandise for various sports leagues and entertainment organizations in Australia and around the world. These products include full-color, lifelike scale figurines of sports persons and celebrities using photogrammetry 3D scanning. Sounds pretty good, but at this point in time, the company's not really doing much, not much revenue. So at this point in time, I would not be interested in this company at all. Not even going to have a look at the cash receipts history. So the next thing I'm going to look at is the chart, and this is not going to look good, most likely. Now, it's an ugly looking chart. In fact, share price 0.1 cent. Can't get any lower than this company. In fact, let's have a look. T3D. In fact, there's no buyers at the moment for 333D. In fact, there's a lot of sellers who want to get out of this. So there's no way, there's no reason to take a position in this company. No one wants to buy this company right now. So that's probably all you have to say about 333D. In fact, possibly this will be the only time I ever mention this company. Now let's get on to the 12th of July. And there's only one company I want to mention on this date, and that company was Sensera. And to be honest with you, this will be the only time I probably mention Sensera. Their ticker code is SE1. These other companies that release quarter reports on this date: Helix Resources, Legacy Minerals. Those are exploring mining companies, so no cash receipts, and I don't look at those type of companies or quarter reports. So let's have a look at Sensera. Is there any reason to have a look at this company? So cash receipts, first thing I look at is cash receipts, nothing. And they're not burning through a lot of cash either. I only spent $92,000 on administration and corporate costs, received $76,000 of interest. So they have a little bit of cash on hand. Proceeds from disposal of term deposits, 4.2 million. Or is that 4,200? No, it's in million. And they do have $6.5 million of cash. So they're not doing anything in the business based off lack of cash receipts and not burning through much cash. So why is that? Let's have a look at the activities report. And very important to note, in the business update, right at the bottom here, please refer to our announcement on the 6th of July 2023 for details of Sensera's proposed delisting, return of capital, and winding up. And this is why, more than likely, this will be the only time I mention this company. I might have mentioned this company once in the past, but there's no reason to look at Sensera anymore. They're winding the company up. And they'll give back those proceeds, those $6 million, back to their shareholders. Let's have a look at the chart. I'm not even sure this company's trading anymore. Last time the company was traded was the 20th of May, 2022. Hasn't traded for a year. There you go. Okay, we get rid of some of these. So that's the 12th of July, a very boring day when it comes to quarterly reports. And then we get on to the 13th of July. There's a couple of interesting reports here. Acumentis and Carly Holdings, they're the only two companies I'm going to talk about that released quarterly reports on this day. Other companies at Alta, 1AD, Gold Hydrogen, Aguya Resources, Metallica Minerals, 5-inch, BPH Energy, and Protein Energy, no cash receipts. So let's just focus on two companies that actually do have cash receipts. Acumentis is a company I have been following a little bit, but the share price has been very disappointing recently. This company has been operating cash flow positive. It's a real estate sort of software company. That's probably the best way to put it. To provide commercial and residential valuations, research, and property advice to many thousands of homeowners, investors, developers, and lenders. The company offers property valuation, insurance valuation, and advisory services to clients, including major banks and financial institutions, etc., etc. So a little bit different than what I thought. I thought they were maybe more software, but this is a valuation or real estate valuation company. So let's have a look at their cash receipts. First thing we should look at, $15.2 million of cash receipts. They also paid $1.1 million in GST. And even though they did pay that amount of GST, this company was operating cash flow positive by $1.2 million. Now, for the year to date, almost $60 million in cash receipts. So this is an absolute real company. And they were operating cash flow positive by $1.5 million. They also paid $4.2 million in GST. Now, the other thing I like to look at is capital expenditure. And the other one is in intellectual property, because some companies, if they do a lot of research in software, will put it into the intellectual property, and it's very important to have a look at that. So overall, this company looks like they were free cash flow positive for this quarter. Cash on hand increased from $582,000 to $1.7 million. So more than likely, the previous quarter, I would have totally ignored this company because of lack of cash on hand. I would get a little bit nervous if a company only had $582,000 of cash. Any debt, next thing I'd like to look at, section 7, here it is. So they do have financing facilities, but they're not using it right now, which is a good thing. So at least they have a little bit of leeway there if they do run out of cash, like they were looking like they might have been at the start of the quarter, but they have built their cash up. So if you look at their activities report, they go through, look at revenue, profit before tax, EBITDA growth over the last 2 quarters, actually last 4 quarters looks like, and I like that sort of thing. I also put nice graphs in here, numbers of fixed rate mortgages ending per quarter for major banks. So quarterly revenue as well. So they have got a quarterly revenue instead of quarterly cash receipts. So I have been following this company using quarterly cash receipts, which is not much different than the quarter revenue. So let's have a look at Acumentis, which is right next to Acumen, their cash receipts history going back to September quarter 2019. And generally, cash receipts have been growing for this company, increased from $8.7 million to $15.2 million. But if you just look at the last 2 years, from July 2021 to July 2023, receipts sort of going sideways. In fact, the record quarter for this company was last June, the last quarter of financial year 22, $16.6 million of receipts, and then receipts fell 3 quarters in a row before increasing this last quarter. So you probably could argue receipts are now flat. We're not seeing any growth. So I want to see growth in receipts. So even though the company was operating cash flow positive in this quarter, I want to see that growth because I want to see a company reach scale by maintaining their cost base, so they're spending. I don't want to see a company get to becoming operating cash flow and free cash flow positive by decreasing their spending. I want to see a company get to that point by increasing their receipts, their revenue, and increasing their spending by a much smaller rate. That's the way to grow a company. The way not to grow a company is by decreasing your spending like some other companies are doing right now. It is a short-term fix, but it's not a long-term solution to becoming profitable. Or it's not a solution to becoming profitable in the long term, if that makes sense. Anyway, so Acumentis, and probably the last thing we should look at is the chart. And I don't think this is going to be a nice looking chart. Yeah, it looks pretty ugly. In fact, the share price has dived heaps. in the last year and a half. Share price has fallen from 18.5 cents to a current share price of 6 cents, so 67% decrease in share price. Share price in, well-defined downtrend. No reason to even think about buying this company. And the weekly chart, going all the way back, this company probably would have been named something else, and I started following it in 2019. You see a massive downtrend, yeah. So anyway, if you do like companies that are operating cash flow positive, free cash flow positive, and you don't care about growth in receipts, maybe have a look at Acumentis. And the other company is Carly Holdings. Now, this is a company I don't know anything about, so we can learn about what this company does together. And more than likely, one of the reasons I don't know anything about this company is because they have disappointed. So just based off initial looking, or my first views of this particular page, they talk about subscription revenue. And if they mention anything about annual recurring revenue, it means they're probably a software company. They're talking about subscription vehicle utilization. So this company has something to do with subscriptions and vehicles. Maybe renting cars? I have no idea. Let's have a look at what they do. Let's go to the About section. Carly Holdings is listed on the ASX. Yeah, we already know that. It is Australia's leading listed company focused on providing innovative mobility solutions for consumers and the automotive industry. It's really interesting way they put it. Innovative mobility solutions. They operate www.carly.co, Australia's first flexible car subscription service. It's actually really interesting because I do believe in the future, we won't own our own cars. We'll actually own subscription to cars. But that's well down the road. It's much more economical. It's much more efficient. But I don't think we've reached that point just yet. So there is a potential. The Carly is in the right space, but maybe they're a little bit too early. So that's what they do. Let's have a look at the cash receipts history. Not the history, their cash receipts or the quarterly report for the June quarter. $1 million of cash receipts, but they were operating cash flow negative by $489,000. Property, plant, and equipment, they spent $1.3 million, so they're free cash flow negative by about $1.7 million. And for the year to date, or the first 12 months of in fact, for the financial year, receipts $3.6 million, and they did burn through about $3.6 million of cash. Let's see how much cash they have on hand. They started at 962,000, finished at 1.6 million. The reason it increased is because in the financing facilities, proceeds from issues of equity securities, so they did a capital raising, 1.3 million. Proceeds from borrowings, this would be a little bit concerning for me, 1.5 million. So they're now in debt. So let's have a look at section 7. Total financing facilities, 4.2 million. Unused financing facilities, 2 million. So I don't like when a company has $4.2 million of debt. And that's all we need to look at for this company. And they don't really mention the average interest rate at 30th of June was 7.95% on acquired vehicles. So it looks like they have to purchase cars. It's very interesting. Oh, I have no reason to have a further look at this company just yet, just based off this quarter report. And then have a look at the chart. So maybe the chart might get me interested in this company. No, that's a weekly chart. Daily chart was trying to turn around. We're getting some really nice volume since about March, April. And the share price started to turn around and then fell off. So nice volume. So I do like the volume, but the share price down to 2.5 cents. Haven't been looking at, let's have a look at Acumentis. Market cap, try to have a look at 12.9 million. And what's this company? CL8. Carly Holdings, $6.4 million market cap, $254 million of shares on issue. So, yeah. Okay, that's all I'm going to talk about when it comes to Carly Holdings. And then we get to Friday, the 14th of July. So 4 companies released 4 reports on this day. Noxo Farm, not a company with any receipts. X Reality Group, this is a company I will be doing a standalone video on because I've already prepared it. In fact, I prepared it about 2 months ago. I just haven't recorded it. And it was based off their it was based off their March quarter results. They were operating cash flow positive. So I thought, let's have a look at this company because of the name, X Reality Group. So have a look at that and look out for that video, which I should release in the next few weeks. Southern Hemisphere Mining, not cash flow, no receipts. And then RMA Global. And I don't know much about this company either. I think this has I thought this had something to do with mining. So let's have a look at what they do. There's no about section. Oh, just hate that. Anyway, the title of this announcement sounds really good. Cash flow positive June driven by US growth. So let's have a look at the cash flow report. Okay, so we have a bit of a discrepancy here. Because they said cash flow, was it cash flow positive quarter? No, cash flow positive June. Okay, so just talking about 1 month. So we're not looking at the cash flow for 1 month. This is for a quarter. Nice cash receipts, $5 million. For the year, $18.3 million, burning through $269,000 of cash in operations. For the year, $4.2 million. So they're not free cash flow positive, not operating cash flow positive for the quarter or for the year. And more than likely, the reason they were cash flow positive for the June quarter was because of a decrease in spending. Now, I'm just assuming that. I could be completely wrong. Enough cash on hand, $6.5 million of cash. And let's have a look at the debt. No debt. So that's a bit of a tick in my book. 24 quarters of funding available based off the cash burn. 24 quarters. But that's based off the cash burn in this current quarter. So looks like they're getting the growth from the US. Whatever they're doing, leading indicator of subscriptions. So maybe they are software, real estate. So it looks like they're into real estate. Talking about compound annual growth rate in subscribers, 138%, total 130% subscribers and promoters. So nice growth in that. Talking about cash receipts from customers in Australia and Z revenue. I just would like a little indication of what they do. Now, if you don't know what they do, you could just go to Market Index, put their code in here, and we'll have a look at their market cap. $50 million market cap, 558 million shares. So let's have a look at what they do. So RMA Global is an online digital marketing business providing extensive data on residential property sale results for residential real estate agents and agencies, as well as reviews of agent performance from vendors and buyers of residential real estate. They operate in Australia, New Zealand, and the USA. So if you're interested about real estate, this is the second real estate company in this list of 9 or 10. So anyway, I've never really followed this company, as you can see. And actually, let's have a look at the cash receipts history. This actually, I do remember this one. This one is actually, what was it again? RMY. This was probably the most impressive cash receipts history we've seen. So a nice increase in cash receipts for RMY, increasing from $1.9 million to $5 million. So cash receipts have almost tripled over the last 5 years. Although 5 years, that's not that impressive. But, nice increase. A general nice, this is exactly what I'm looking for. A nice increase in cash receipts over time. Probably the main reason I haven't really looked at RMA Global is simply because they are still burning through cash. And to be honest with you, the increase in cash receipts over the last 2 years is not that impressive, from $3.9 million to $5 million. So I don't think I've done a video on this company before because I don't know anything about them. So that's all I've got for those companies that released quarterly reports last week. Now on to today. So I'm recording this video on the 17th of July. Time is 3:33 p.m. 3:33 p.m. There was no events on the 21st of July because that has not happened yet, unless you have a time machine. So let's have a look at the companies that did release a quarterly report today. We have Love Group, Hillgrove Resources, Whispir. Now, Whitehaven Coal was not a quarterly report. Well, sort of was a quarterly report, but I'm looking for those companies that release a quarterly cash flow report. Now, most of the big mining companies will release a quarterly report, and Whitehaven had In fact, you can see the significant decrease in cash flow this company, a company like this, a coal company will have because of decrease in coal prices. So let's have a look at this line here. So cash generated from operations in this quarter was 435 million and 4.2 billion in financial year 23. So in one quarter, 400 million, for the year, 4.2 billion. So the majority of cash generated from operations in this company was the first 3 quarters when coal prices were high. And they have a net cash position of 2.65 billion, but they're just giving their shareholders back a lot of cash. In fact, bought back 38.9 million of shares. They probably should have waited before the share price dropped a lot, which is doing right now, for a total of $950 million to acquire 119.67 million shares. So the way they're providing value to their shareholders is buying shares back, but I don't think they should have been doing that when the share price was really high. But that's just in financial year 23, they returned $1.6 billion of capital back to shareholders through dividends and buybacks. They won't be able to do that moving forward because of what's happening with coal prices. And I can almost guarantee you there are people buying these companies because of the dividend yield, because of the cash flow, without even thinking that these cash flows and dividend yields will significantly drop moving forward. The only saving grace for Whitehaven and other coal companies is a cash on hand, 2.665. But if they keep issuing dividends and doing share buybacks, that cash on hand will gradually fall away. So I will have a look at most mining companies' quarter reports. But I would prefer a cash flow report. But they sort of do provide that in a sort of way, because Whitehaven just told us they had $485 million of operating cash flow. Was it operating cash flow? I can't remember. Anyway, let's have a look at Love Group. What do you think this company does? It's in their name. This is a dating service company, not in Australia. They have dating services in Hong Kong, Singapore, and Bangkok. I did go through this because I thought I knew what they do, and then it's exactly right. And the good thing about Love Group, let's have a look at the cash receipts history first. Not history, the cash flow report. So $1.2 million of cash receipts, operating cash flow positive, $301,000. And not only that, they don't spend any money in investing activities, $2,000 in investing activities, and financing activities, $0. So the operating cash flow all goes to the bottom line. So this company increased their cash on hand. Not only that, for the year to date, $649,000 of positive operating cash flow, not much receipts. So this is a capital light company, and they could be quite efficient. Cash on hand up to 2.1 million, no debt, probably no debt. But the main thing is the cash receipts history. And in fact, they provide this for us. So this is the cash receipts history, not much. So from the first quarter of 2020, cash receipts have gone sideways, not much growth at all. A nice quarter. This was a record quarter for the company. And just below this, they have operating cash flow. And typically, it's just on a 0. Some quarters, it's positive. Some quarters, it's negative. And by far, this was their best quarter. Cash receipts by geography. So this company has the majority of their cash receipts in Hong Kong. Next best is Singapore. And then Bangkok is falling right behind with only 3% of cash receipts. So it looks like this company's love matching Bangkok service is not that good. And that's probably all. Leading provider of dating services, including personal matchmaking, online dating, and singles events. And Hong Kong, Singapore, Bangkok. And to be fair with you, I won't look at this company much anymore. Hillgrove Resources, I'm hoping this company gets into being generating cash receipts in the next year, because they will be bringing their mine, forget the name of the mine, to operations in, they said 2024. Was that financial year 2024 or calendar year 2024? It was unclear. Now on to Whispir. Actually, before we do that, let's have a look at Love Group. Let's have a look at their market cap. $4.5 million market cap. Okay, so, and only 40 million shares on issue. I would think with not many shares on issue and not the most exciting company, business model, share price going sideways. It's been going sideways for the last 5 years. In fact, this company is highly illiquidly traded. And we probably can see that just by looking at what's happened today. They've had 2 trades go through today. Let's have a look at the course of sales. One of those trades was for 2 shares, totaling 22 cents, because the share price is right now 11 cents. Total value of the trade today, $327. So, yeah, I'm not that interested in this company. I don't mind buying illiquidly traded companies, but typically it's companies I think have a lot of potential in the future, because what you want to do is buy into a company when they're illiquidly traded and then get out when they're liquidly traded. So hard to get into, easy to get out, which is a little bit different from some of the experts when they talk about lobster pots. It's easy to get into, hard to get out. You want the complete opposite. And I'll talk about that when I do my next rant. Anyway, on to Whispir. Company I have held in the past. And the first thing I want to do is supplies a no-code communications as a service platforms, CAS, enabling seamless omni-channel interactions between organizations, their systems, and their people to solve common challenges in terms of compliance, deliverability, and engagement. This was a winner during COVID-19 because all those text messages that you receive because of COVID-19 from the government, I'm pretty sure a lot of that went through Whispir. And then they lost that revenue because we stopped getting COVID-19 alerts or texts from our government. Anyway, onto the receipts. Nice receipts, 13.4 million. The problem with this company is they burn through a lot of cash, a lot of spending. So $4.9 million on product manufacturing and operating costs, $6 million on staff costs in one quarter, $34 million staff costs in the year to date. So they love spending money. And unfortunately, the company is still not operating cash flow positive. They've been promising hitting that inflection point for a while. Not only that, if you look at the year to date, $56 million of cash receipts, and they burn through $16.4 million of cash because a lot of spending on product manufacturing, operating costs, and staff costs. And this has been a problem of a lot of companies in the tech sector. They only care about receipts and revenue growth. They didn't care about operating cash flow, free cash flow, and profitability. And these companies have faced the consequences with a significant decrease in their share price and valuation. We'll have a look at Whispir's chart in a second. Now, I'm pretty sure they do talk about operating cash flow, maybe not free cash flow. So their aim is to become operating cash flow, but they do spend a lot of money on investing activities, $5.4 million in intellectual property. I'm pretty sure that is capitalized research and development, not expensed. A little bit of capital expenditure, not a lot. So overall, burning through a fair bit of cash. Proceeds from borrowings, $1 million. So borrowings have increased. Cash on hand has decreased from 4.9 million to 4.3 million. Let's have a look at the debt. Not a lot of debt. So they've started to increase their debt. So this would be a concern, a slight concern right now, because only $1.1 million. They also have $6.5 million in unused financing facilities. So the biggest problem I have with Whispir was the cash receipts. So let's have a look at the cash receipts history. So you can see how they really benefit from COVID-19 in the December quarter 2021. Receipts went up to 25.4 million, and then receipts started to fall. In fact, receipts have fallen 1, 2, 3, 4, 5, 6 quarters in a row, although they did increase slightly in the December quarter, up by 400,000. But receipts have dropped from 25.4 million to 13.4 million. But if you take away the good part of maybe 3 quarters towards the end of 2021, start 2022, receipts have grown over the last 4 years. So first quarter we had receipts for this company was back in the June quarter 2019, and receipts have grown from 8.3 million to 13.4 million. The very fact is receipts have dropped, and the only way this company has got to that close to that inflection point of becoming operating cash flow positive or even free cash flow positive. Let's see what they talk about. Cash flow break even clearly in sight as free cash flow up 73%. Well, yeah, it's still negative. That's my biggest problem. And you can just see how this company's management has completely changed their focus from growing receipts and revenue from 2 years ago to just focused on free cash flow. So they've mentioned free cash flow once. cash flow, free cash flow 2, positive cash flows, so 3 times, and here it is on the first page, a free cash flow graph, free cash flow by quarter. So you can just see what this company is focused on right now. They understand it's all about cash flow, positive cash flow, free cash flow, and profitability, and that's why they're focusing on right now. And the way they've gotten to this point is not by increasing their cash receipts or their revenue, it's by decreasing their spending, which is probably what they should have done in the first place. Did they really have to spend a lot of money to increase their receipts and their revenue? Probably not. They probably should have focused on becoming cash flow positive, free cash flow positive and profitable, and then they can grow their business that way. But back 2 years ago, most companies' management didn't care about that, except a few. And I actually did buy those companies. Dropsuite was one of those companies. Anyway, that's Whispir. Have no... Actually, let's have a look. Yeah, I keep forgetting to have a look at the markup. So Whispir has a market cap of 37 million. It used to be probably 500 million, if I remember correctly. 118 million shares on issue. Let's have a look at the chart. This is going to be a really ugly chart. So share price reached a peak of $5.25 back in July 2020. In fact, the share price of this company went from about 75 cents at the bottom of the COVID-19 financial panic up to $5.25. So when I said the market cap of this company was 500 million or so, it might have been higher than that. And the share price moved into a downtrend in March of 2021 and has been in a downtrend ever since. There's been times when the share price looked like it wanted to rebound back in January 2022, a couple of times, but it's still in a downtrend. The market has liked this announcement today, up 8.6% after being up 16% on the Friday. Loose lips, who knows? But that does not mean this is the end of the downtrend. We've seen these sort of bounces quite often before for Whispir. Okay, and one more company I want to talk about, and that is Butn. Not even sure that's how you pronounce it. B-U-T-N, Butn. I think I've done a video on this company before. They do provide funding for enterprises. I don't think they provide funding for individuals. And this is another company that separated their report, their core report, into a cash flow report and activities report. So let's have a look at the cash flow report first, and then we'll have a look at the quarterly activities report. So Butn, $3.4 million of receipts in the quarter, $12.2 million for the year. So it seems like receipts maybe for the quarter were a little bit higher in this quarter than the previous 3 quarters, but not by much. And the company was not operating cash flow positive, negative by $409,000. The main thing here is interest and other costs of finance paid, $1.4 million. So if they had no debt, this company would have been operating cash flow positive by $1 million. But because this company is a borrower or a lender, they have to borrow money to lend money, which is why they have interest, or they have to pay interest and other costs of finance paid. So still burning through cash, proceeds from the issue of equity securities, so capital raising of $1 million, proceeds from borrowings $3.2 million, cash on hand $14.6 million. Company like this probably needs a fair bit of cash on hand to maintain lending out money. They're going to have a little bit of debt here, $81.5 million of debt. I'm not going to talk about the loan facilities, the particulars of it. You can do that yourself. I'm just looking for interest rates here, 7.25% and 10.25% interest rates, 7%, 10.25%. That's the main thing I'm looking at. And the next thing I want to look at very quickly is the activities report. So I'll just go to about section first. I'm pretty sure they lend mostly to enterprises. Yes, Australian business-to-business fund innovating the way SMEs fund and grow their businesses. So I want to know how they innovate, how they're innovator. So Butn focuses on transactional funding SME, small to medium-sized enterprises, businesses through their working capital constraints by financing individual transactions, leveraging the end debtor's credit. With the vision of your money today, Butn delivers cash flow funding solutions at the click of a button, having funded over $1 billion. Seems like they give money to businesses when those businesses would usually expect to receive that money well into the future. So they're bringing forward that cash flow for these businesses. So I understand sort of what they're doing here just by looking at this about section. I haven't been long on the ASX because they've mentioned here in the activities report use of funds, IPO funds, prospectus and expenditure to 30th of June 2023. So haven't been around for that long. Now on to cash receipts history. BTN. And they've been around for 8 quarters, so 2 years. Nice increase in cash receipts, a nice steady increase in cash receipts over the last 5 quarters, increasing from $1.2 million to $3.3 million. And I have a feeling the market cap of this company is like 50 million. Could confirm that. 34.8 million, so a little bit lower than I was expecting. Share price 19 cents. Not a lot of shares on issue, 183 million. Doesn't seem like this company has been as affected by other lenders out there. I'm talking about small lenders like Prosper, Resimac, I think. What's the other one? Money Me, companies like that who have seen the share prices absolutely hammered. In fact, when you look at Button's share price, sort of going sideways. In fact, you could say maybe a bit of an uptrend here. If you look at the lows, since over last year, share price maybe in a bit of an uptrend developing. So the market's sort of liking this company at the moment, slightly liking this company, but well down from when it IPO'd. In fact, the share price when it IPO'd was as high as about 55 cents. So it's gone from 55 cents to 19 cents. But I like what the share price has been doing over the past year. Probably the only thing I'd like to see is a little bit more volume coming in. I want to see fund managers interested in this company. At this point in time, there's little doubt, very few fund managers will be interested in a company like this because they're still burning through cash. Okay, let's have a quick look at top gainers for today. Metal Bank, Terrigan Holdings, Fat Fish. In fact, let's have a look at Kogan, 6.5%. Pantora, Drone Shield, they announced a contract today. Gascoigne Resources, Enero Group, Doug, BetMakers, Energy One. Yeah, you go Energy One. Top losers today, based off markup. Endeavour Group, down 10%. What happened to Endeavour Group today? Victorian regulatory reform. Don't know why fund managers absolutely love Endeavour Group. I did a little bit of research on the company, and it was a really disappointing company. So little growth. Anyway, Magnus Energy Technology. Anyway, that's all I have for today's video. If you have any questions about any companies I featured in today's video, this is another long video, just leave those questions, your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.